Hello everyone. We are discussing all the unsolved questions of the first chapter, that is the basics for partnership. We did the last three, in the last video, we did the first three questions, starting from the fourth question now. Let us read the question. So they said there are two partners, Akriti and Bindu. They entered into partnership on 1st April 2019, okay, without any partnership agreements. There's no partnership deed prepared. They have put in the capital. So 5 lakh is given by Akriti and 3 lakh is given by Bindu on 1st October 2019. That is after 6 months. Okay. Then they said Akriti advanced, that is his first partner has given rupees 20,000 by way of loan to the firm without any agreement as to interest. So we have already seen in the previous video that whenever there is a loan from uh, any partner and nothing is been agreed, then the interest rate to be given is 6% per annum. Then they have said the profit and loss for the year ended 31st March showed a profit of rupees 43,000. Then partners could not agree upon the question of interest on the basis of division of profit. So you're required to prepare, you need to divide the profits and prepare a P&L appropriation. So we understand one thing, that whatever interest we pay to a partner for his loan is a charge against profit, right? It is to be transferred to PNL, not to PNL appropriation. Okay, so when I prepare a profit and loss account like this, I'm making a small PNL over here, where I say that as of now, the profit with us is 43,000. Okay, and now I will have to give interest to Akriti. So to interest on Akriti's loan, we will do the calculation over here. So the loan is given of rupees 20,000 at the rate of 6%. And nothing has been told about the date, but we understand that they have introduced the capital on 1st of October 2019. So on the same date, we can presume that Haridhi has given a loan. So from October, November, December, Jan, Feb, March, for 6 months, we need to pay interest to Akriti. So if I do the calculation, 20,000 into 6% for 6 months, it gives me an interest of 600 rupees. After paying this interest, balance profit with the firm, that is to profit, which is transferred to P&L appropriation, will be 43,000 minus 600, 43,000 minus 600, which is going to be 42,400. So if I make a P, okay, they have not given any PSR, profit sharing ratio. So we know that when there is no profit sharing ratio agreed, we have to give them equally. P&L appropriation account if I make, so this profit will be taken from here, 42,400, and both the partners will be given equal share divided by 2, 42,400 divided by 2. Akriti should get a profit of 21,200 and Bindu should get a profit of 21,200. So that is where this is tallied. That profit is shared equally between Akriti and Bindu at 21,200 each. Okay, so this was the solution for question number 4. Just transfer it side. Let us go for the next question now. Okay, so that is question number 5. Okay, question number 5 says that there are two partners, Rakhi and Shikha. They have the capitals as 2 lakh rupees and 3 lakh rupees respectively. The profit for the year is 23,200. As per partnership agreement, they share the profit in the capital ratio. So capital ratio is 2 lakh is to 3 lakh. That means the profit sharing ratio is going to be 2 is to 3 in the capital ratio. Okay, fine. After allowing salary of rupees 5,000 per month to Shika. So we have to, Shika will get a salary of rupees 5,000 per month, and interest on partners' capital at the rate of 10% per annum. During the year, Rakhi has withdrawn this much, Shika has withdrawn this much for their personal use, so this becomes their drawings. Okay. As per partnership deed, this very important line, salary and interest on capital should be treated as charge on profit. That means you will have to charge them compulsorily. Okay. So in general, we understand that interest on capital is to be given only and only when uh, there is profit. But when it is a charge against profit, then you will have to give it even if you don't have the sufficient profits. Okay. So I start my P&L appropriation by saying the profit as of now, which is 23,200, we will have to give salary to uh, Shikha. Salary to Shikha is going to be 5,000 per month. So 5,000 into 12, yearly salary is going to be 60,000. Same way, we will have to give interest on capital to both the partners. So Rakhi's capital is 2 lakh, and on that 2 lakhs, we will get a 10% interest that goes to 20K. And Shikha has 3 lakh, so she will get a 30K. Total interest is going to be 50,000. Now, if we see the expenses are more, so debit side 60,000 plus 50,000, total is 1 lakh 10,000 in the debit side. This is a bigger amount. So there's going to be a loss of 86,800. And this loss will be divided between both the partners in the capital ratio, which is 2 is to 3. So 86,800 divided by 86,800 divided by 5 into 2. So Rakhi's loss sharing is 34,720, and 86,800 divided by 5 into 3. So 52,080 will be the loss sharing of Shikha. That is what is the answer. And then you can make the partners capital accounts where they will have I will just show you a partner's capital account for only one of the partners. You can make for the other one. So if I talk about, for example, Rakhi's account, so what all things it will have? Opening capital of Rakhi is 2 lakh rupees. Okay. Then Rakhi is also going to get the interest on capital. So IOC of Rakhi was 20,000. Okay. Then there is going to be a loss share. So to loss, which is going to be 34,720. There's going to be drawings of Rakhi, which is 7,000. Okay. Salary is to Shikha, so that will come in Shikha's account. And then whatever is the balancing figure will be the closing balance of partner's capital. Same way we will prepare for Shikha also. Okay. This is the solution for question number 5. Let us move to the next question. Before that, let me just transfer this to the side. Okay. Same way. Yeah. Okay. Now, next question, question number 6. Okay. So let us read the question first. Lokesh Azad are partners sharing profits 3 is to 2. Yes, the capitals are 50 and 30 respectively. IOC is agreed at a rate of 6% per annum. Okay. So IOC is there at a rate of 6%. Azad, one of the partners, is getting a salary of 2,500 per annum. It's a yearly salary given to you, not a per month salary. Okay. Then in this year, the profits prior to IOC, but after charging Azad's salary means already Azad's salary is deducted, expenses booked, and after that you are left with a profit of 12,500. Okay. The provision of 5% is to be made in respect of manager's commission. We understand that whatever provision we will make for manager's commission, that should be on the profit before any appropriation is done. Okay. So this profit of 12,500 is actually after appropriation of salary of Azad. So it is reduced. Yes, we have reduced Azad salary and then we got this profit. So actual profit is actually more higher. Yes, so I will have to add Azad's salary into this, which is of 2,500. So I will get the profit before any appropriation, means before salary given to Azad, which is going to be 12,500 plus 2,500, 15,000. Correct. Profit should come to 15,000. Yes. And now when I make the P&L, first of all, so when I make a P&L, my P&L will show profit, which is going to be of 15,000. And I will have to charge managers commission, which is going to be 5%. 5% of 15,000 is going to be 750. So the profit which should be transferred to appropriation, that should be 14,250. Okay. Now, from this 14,250, now I make a P&L appropriation. I'm making it over here at the top. Okay. So P&L appropriation. Yes, I get a profit from P&L 14,250. What all things I need to do is I need to pay this. Now I need to pay the salary. The salary is appropriation. So I pay a salary to Azad 2,500. I need to also give IOC to both the partners. So IOC is going to be for Lokesh, it's going to be 50,000 into 6%. That is going to be 3K. And for Azad, it's going to be 30,000 into 6% is going to be 1,800. So total coming to 4,800. Okay. What else? IOC is done. Salary is paid. I think so. It's enough. Whatever balancing profit we get, 14,250 minus 2,500 minus 4,800, that is 6,950 is the balancing profit, divided into the agreed ratio 3 is to 2. So 6,950 divided by 5 into 3. So the profit share will be 4,170 for Lokesh and balance 2,780 will be for Azad. So if we check the solution, is the profit 4,170 for Lokesh and 2,780 for Azad. Of course, you will make a proper fair working. I'm just showing you the calculations. You're expected to make a proper P&L appropriation, a proper P&L, and a proper working for this. Okay. So I think so. We'll just halt up to question number 6 in this video. Next video, we'll continue ahead with the next questions. Thank you so much.